Let's Get Down to Business is presented by Bravo, the marketing arm of Ash Brokerage Corporation, the practice enhancement company. All this week, it's news you can use. And on today's show, disability insurance update for October 2013. And with me today, nationally recognized impaired risk expert Tim Kakezu. Hi everyone, I'm Steve Savant, syndicated financial columnist and contributing author to Backroom Technician. We're on location in Indianapolis, Indiana. Let's get down to business. Hey, welcome to the show, Tim.
Thanks for having me, Steve. I appreciate it.
Well, it's disability today, and we're talking about it. Every month we're doing our look into disability, news you can actually use. We're looking at individual DI because it's the most popular. When you're looking at it today, what's going on in our marketplace today that you would say, this is a highlight? The last 30 days, some of these things have kind of popped up, they're anomalies. Draw one big item that you think is a billboard thing to talk about.
Well, in the disability marketplace, thank goodness there's been a lot of stability over the years. But the most recent thing is MetLife has introduced a brand new disability product to the marketplace.
Now, did they have one before this?
They did. So this is a product now that they've revamped after a product that's been out there for 10 years.
How significant was the improvement or the new version?
The new version actually has some significant improvements. One of the biggest areas is, as they looked at their old product that was 10 years old, they were able to reprice the product for the younger ages. So you're seeing in the disability marketplace actually a product now that has a lower pricing for some of the younger ages.
Do you think people are still interested in having a bigger name for disability from a claims paying point of view? Is that a big draw, do you think?
Well, of course, from a disability perspective, claims paying is critical in terms of your reputation in the marketplace. The carriers that we work with all have phenomenal claims paying tradition behind
Good track record?
Absolutely. So there's no concerns in that marketplace with especially the carriers we work with, but across the board, those carriers have had a tremendous reputation for paying the claims on those cases.
One of the drawbacks a lot of people always bring about disability is they can't get into the definitions of disability. It feels like you got to be an attorney to read these contracts. Do you find that true, or have we been able to break things down into a policy provision spreadsheet or something like that? Make it in English for all of us who are not morbidity agents.
Yeah, and that's a great comment. I mean, we spend a lot of time talking with the agents about the definition of disability. I mean, there's still the opportunity to have that pure ONOC definition out there. A lot of agents now feel that the baseline definition, which is the not engaged definition of disability, they're not going to force you to go back to work. If you go back, they can pay you on a residual claim. But that's where we spend most of our time with the carriers is that baseline definition, but we have the ability to add in that true ONOC definition. But with the agents these days, we do have to spend a lot of time going through the differences between those two definitions specifically.
Well, when we're talking about, because we have an invert, how many carriers do you think we carry?
In terms of Ash Brokerage itself?
Yeah,
we have 8 different disability carriers right now that we work with.
When you're looking at those, are those all, their forte, are they all individual DI issue?
Yeah, those are, the way that we look at those, we work with just the individual disability carriers. And of course, in the marketplace, we look at the white collar type of carrier and the blue collar. Different products, they have different features within their product specifically. So when we look at those carriers, you may only be looking at 3 of those 8 at any one given time, based upon you being a white collar or blue collar person.
Well, let's just go down that road for a second. Now, in blue collar, can I still get long-term disability versus short-term?
You sure can. Yes.
So let's just talk about, if you're looking at blue collar, and I know there's different levels and vocational levels of blue collar, but in the global view, would you say that that is a market? Because generally, I keep hearing that pretty much DI is a white collar. Is that not true?
I think the blue collar marketplace, the middle America marketplace, and I like that terminology better, that middle America marketplace is vastly untapped. If we do a good job of plan design with the case, you may not need a 2 age 65 benefit period, but if we can provide you a 5-year benefit period, which basically encompasses 80% plus of all the claims that are out there, we can make a premium that's affordable to that client and still provide them a very top quality type of product.
Now, the only reason I'm going to mention this is just because, not that we target consumers in this show, but about 18% of our viewers are people trolling the web for information on, and in this case, DI. If I have a blue collar person who's saying, hey, 60 months and in my elimination period, That's pretty affordable.
Oh, absolutely. And, especially if you look at a 90-day, and we can go shorter on the blue collar carriers, because a lot of people may not have that 90-day rainy day fund, but we can make that product very affordable. You may not end up applying for the maximum benefit available to you, but, I think you and I would both agree, having some disability versus having none at all.
Better than nothing.
Absolutely.
Well, when you think about it, I'm still shocked 30 years later when we talk about disability, especially since we've been online now for the last 3 years. I'm shocked that people don't understand that the benefits are tax-free to the consumer.
Yeah, I think that's a critical aspect. We get a lot of agents that talk to us on a daily basis of why can I only get 60% replacement on a policy like that. And when we go through the scenario of telling them that 60% is actually a non-taxable benefit, therefore it relates to about 80% of your client's take-home pay, you can hear over the phone, their eyes light up and say, okay, yeah, they get it at that point.
They get it. Now that, in blue collar, I think you're totally right. I think people kind of punt. They're trying to stay in the professional white collar market, attorneys, physicians, so forth. But when we're in blue collar, this is a great one because we're buying, in our mantra, we're buying term and spending the difference on blue collar DI.
Yeah.
Or as you say, what did you call it?
Middle America. Absolutely.
Well, let's talk about, when you think about that, who are some of your key players? Not that we want to front any one carrier, but give me a couple that you say, hey, blue collar, these carriers, 2 or 3 are pretty good.
Yeah, we primarily look at Assurity and Mutual of Omaha. Illinois Mutual's out there as a middle America carrier also. So those are the 3 really that we represent on a daily basis. Assurity has a very strong contract out there that we look at every time, and then the other carriers might have a niche or a pricing advantage in a specific case.
Well, when you look at this in your career, you've been in DI how long?
22 years.
22 years. I mean, that to me is mind-numbing, Tim. I have to say, wow, 22 years as a morbidity agent. When you look at that, though, when you're sitting there and you're looking at these 3 carriers, do they usually occupy about, 70%, 80% of the market?
Yeah, I mean, when you look at those 3 carriers, and again, that middle America marketplace, you look at the white collar carriers, and there's a number of those, but in that middle America marketplace, those carriers have great products, but they've found a niche. And you don't have a lot of carriers playing in that niche, but those 3, if you look at those 3, you're going to have a great broad spectrum of what's out there in the marketplace.
When we come back from the break, we're going to continue our disability insurance update for October 2013 and talk about some of the carriers who have unique policy provisions and occupy a significant market share in the DI space. And you can request the Disability Insurance Manual from Backroom Technician right on our site at www.downtobusiness.ashbrokerage.com, or just sign up for your own 30-day free trial offer with Backroom Technician at www.brtnow.com/trialsignup.aspx. We'll be right back right after the break.
Take a close look at your hard-earned dollar. How do you think your money's doing? Are you keeping an eye on it? Is it protected from taxes, inflation, and market risk? Over time, those Washingtons could become Franklins. With tax-advantaged indexed universal life, from one of the largest distributors of indexed universal life, Ash Brokerage.
Well, welcome back. I'm Steve Savant with Tim Kukezu. And remember, you can watch all the episodes of Let's Get Down to Business, including my weekly consumer show, Steve Savant's Money, the name of the game, right at www.ashbrokerage.com. Just click on the show logo on the homepage and it'll take you right out there. And just a heads up, before moving forward with any of the ideas you ever hear on our show, always consult your tax advisor, legal counsel, as well as your broker-dealer compliance officer. Well, let's get down to business. We're continuing our disability insurance update for October 2013, and some of the carriers who have really unique policy provisions and occupy a significant market share in the DI space. Well, welcome back to the second segment, Tim. We talked a little bit about individual, a lot of blue collar, and I think that's kind of neglected. I'm glad we touched base on that.
Yeah, it's definitely a neglected market, and I think there's a huge opportunity out there.
Well, let's go to the wheelhouse, because everybody goes, yeah, but I'd really rather be at the upside. And I think that's a mistake, actually, for a lot of people's practice. But let's talk about white collar, and let's do the generic, and then let's dump into ONOC.
Okay.
So let's talk about the white collar market. Tell me what's going on. What's an update that we need to know about?
Yeah, again, a lot of stability in the white collar marketplace. MetLife having that new product introduction after 10 years that they made some enhancements to that product introduction. But you have, a core player, a core stable of players in that white collar marketplace. We represent the standard principal in MetLife with Ash Brokerage, but there's some others out there. But those three really bring to the table a great cross section of the DI market.
I want to ask you a question because I've noticed that some people, baby boomers now, are not really just retiring now at 65 anymore. So once we get past age 65, are there any specialty players in the white collar market?
Well, you have the ability to renew your policy after the age of 65, but they'll make some limitations to that policy. But we have a great partner that we use at Ash Brokerage for our Lloyd's of London cover holder, who's Peterson International. And they offer coverage up to 70 plus in some situations. So they're a great opportunity for that client that might be a little bit older, who needs really a good occupation definition in their policy after the age of 65.
When we're talking about own-oc, a special skill set of someone, an attorney, but he's really a trial attorney. We're talking about a physician, but he's really a brain surgeon. It's very specific. How does that jump go in underwriting? Because everybody says we get lost. Once we say we want to define it and create own-oc, we kind of get lost in how to do it.
Yeah. I mean, the carriers have some specific, verbiage around the way that they look at. Actually, with that MetLife product, and I don't want this to be a commercial for MetLife, but it's still.
If they want to pay us for it, I'm okay with it.
But they've actually included that language now in their contract. So they'll specifically tell you that if you have a medically recognized specialty in your field of practice, that if you become disabled as a neurosurgeon, as an example, an extreme example would be then you become an orthopedic surgeon, then they have the ability to pay you still a disability claim, even though you're considered a surgeon in that situation, but you've changed your specialty.
Now, do a lot of these carriers, like the principal and the standard, do they list that kind of information?
Yeah, some of those carriers actually have it written into their policy specifically. Some of them will provide you a letter on addition to the policy that says, yes, we still recognize that specialty. So those carriers that we work with do absolutely recognize a specialty definition of disability. Some just include it in the actual policy, some include it after the fact.
Now, because we have that not only in specimen policies, but in policy provision spreadsheets, you can actually pre-qualify the client and say, oh yes, here it is in their language. They do cover that skill set.
Yeah, we're doing that on a daily basis these days, providing those agents who want to see like an ophthalmologic surgeon as an example, that they have that specialty definition language available, so if they can't perform that specific function, they're still going to collect a disability claim.
Have you seen white-collar own-oc vocations where business owners would say, I'm going to add on to that business overhead expense?
Yeah.
Do they kind of go tandem in this way? I take care of my own revenue. Now I'm going to take care of my business expense.
Yeah, I think we do a good job of reminding the agents about business overhead expense. A lot of them really want to focus on that individual income replacement. But from a team, we really try to dive in with the agent and find out what that client might be looking for, and adding business overhead expense, especially to a business owner where you're going to have to get the tax returns in on the underwriting side of things. It makes perfect sense to provide that business overhead expense either in a pre-sale form or while we're going through the underwriting process. We might tell the agent, hey, we're going to also issue a business overhead expense policy and allow you to place that policy at the same time you're doing the individual.
I saw an article not too long ago that talked about not only white-collar own-oc income, but separate from that, a separate policy that actually would cover their retirement contributions. How important is that to the white-collar community?
Yeah, I think that's a critical aspect of that because, of course, if you're disabled, you may not be or probably not funding your retirement any longer.
Without question.
And if you have a long-term disability, if you're not going to fund your retirement for a couple years, if not longer, there are carriers out there that will allow you, and they actually put money into a separate fund that if you become disabled, they will continue to fund your retirement planning for you.
I just want to make sure all our audience now that does not, the white-collar compensation, annual compensation is one thing, but his retirement contribution is another. So we're talking about doubling up here.
Absolutely.
So talk a little bit about that, because to me, I think people forget that, well, I'm only at 60% of my annual comp, or they limit themselves.
Yeah, I mean, when you look at that retirement aspect of things, in this marketplace, people are trying to put as much aside for retirement if they have the ability to do so. And if you stop funding that because you don't have an income coming in, these carriers will either give you a specific amount based upon what you're putting in, or some will give you even the opportunity to put in more than what you were putting in if you want to buy that monthly benefit.
So even if your contribution history is X, you could fund, if you had headroom in your qualified plan or whatever, if you're willing to pay it.
That's right.
You could cover not only your 60% of your
Contributions and income. Yep.
as two separate issues and really maximize your coverage.
Yeah, you can actually apply for more than you are putting into your current retirement benefit.
Before we close our segment, I'm wondering how many people shift from non-deductible to deductible in a business scenario?
You know, in the overall environment, I think you really want to focus on having those benefits paid to you on a tax-free basis.
So the thrill isn't really a deductibility.
On the business overhead expense, you really don't have an option. You want to deduct that, and the benefits are tax-free. But really, on the individual side of things, I would much rather receive a benefit that's tax-free than having the deductibility of the premiums on the front side.
Well, that's our show for today. Remember, you can read all my online insurance news commentary, advisor blogs, and articles on Producer's Web, as well as my answers to consumer questions on Insurance Library. And don't forget, you can watch and view all our past episodes on our on-demand section located at www.downtobusiness.ashbrokerage.com. So don't forget to follow me on Twitter, Facebook, LinkedIn, or just email me, steve.savant@ashbrokerage.com. And remember, you could be wiser as an Ash Brokerage advisor.